Good evening, all. Ira Epstein of Linn Associates with your financial market wrap-up, and this is for the evening of Monday, and this is the 30th of December, 2019, and we're about 5:15 in the afternoon, so the boards behind me are already into the Tuesday trade session. I am back from vacation, feel refreshed. All I needed was a few days. For those of you that are subscribers of my morning videos and my written updates, you know I didn't take any time off. I kept you going right as I promised I would, and that's what I try to do. That way I'm fresh when I come back and I don't have a lot of catching up to do. Let me give you my trade advice right now. You're at the end of a trading year. If you're trying to make sense of the wild swings that are going to go on between what happened today and stock market correction and the bounces you're going to get, come on. It's year-end evening up. A lot of people are just adjusting their books. A lot of people have left. They're gone already. This building at the Board of Trade is going to be empty tomorrow for most people. I came in so some of my brokers can enjoy their holidays. Some didn't go away Christmas. They're now leaving at this point. So I come back. I had my 3-4 days, and that was basically it. And that's all I need. I'm refreshed. Stock market's still acting pretty good. Energy market's backing off a little bit. Bonds and notes, wow, you got down in the 10-year and the futures enough where you got into the 192 area. Are you going to go to 2%? I don't know. Is the market ahead of itself? Might be. You can't make all your trade decisions in the last few days of a year because the volume thins and there's just so much noise in the market as people decide what they're doing and how they're cleaning their books up. Now, I was reading some interesting reports, and I think one of the things we should all understand, if you look at this chart, it's been a phenomenal year. It's a weekly chart, and look at how this market for 2019 just soared to the upside. There's probably a lot of people that want to take some money off the table, and why would they do it right here? They might wait a couple of days and get into the 2020 year, which is after the first. And at that point, any monies they take out, if they wanted to get some losing stocks off this year to write off whatever little bits they can, away they go. But if they get out in 2020, they don't pay taxes on that money. I hope you realize that until April of 2021. So that is something you have to consider whenever you're looking at this market. I did a report today for Bloomberg and the CME group on the January effect. And here's the problem with the January effect. When it was discovered was in around 1942. And it was a seasonal impact back then as to what traders would look at in terms of a lot of individual investors own smaller cap stocks. So they'd get out, take their losses before year end and come back into them in January. What they did, what you try to do today, and you have to understand, is number one, the tax laws have changed rather dramatically. Number two, there's also the football rule. Who wins the AFC versus the NFC? I can go on and on. How January goes, so goes the stock market. Well, that was certainly true this year because as January went up, this market never looked back. But I don't believe in all those adages. I think you got to take it a day at a time, a week at a time, whatever your time frame is. As we can see, we've entered a bit of a correction stage with today's break in the market. Now, this dot here, we're already in the Tuesday evening trade, and you finally broke a pattern. Now, let me back this up so you see. You've had this pattern of higher lows, higher highs going on since literally the first couple of days of December. It finally has broken that. Again, I'm not going to try to read into it. Why would you in the last day or two of a trading year? What I can tell you is you're still over the 18-day average of closes, which should offer, in theory, some support around the 31.91 level. I can tell you that the upper Bollinger Band offered resistance, but the market crept along it as it had an embedded reading. If you lose that embedded reading tomorrow, the question is you can only get it back the day after it's lost. So if it loses it on Tuesday, it puts into play the probability of the price and 18-day average making a run at itself. It doesn't mean it stays lost. You have then Thursday to gain it back. We're not open on Wednesday, so keep that in the back of your mind. When we look at the NASDAQ, you haven't lost the embedded reading. It is weakening. The market pattern did go into a corrective mode, and similar to the other markets, You've broken the pattern of higher lows, higher highs. Okay, but again, I don't know what to read into that in the last day and a half of a trading year. The Dow didn't do that. It still has the pattern of higher lows, higher highs, but it's losing its embedded reading. That means price and the 18-day average are likely to make a run at each other if it stays lost. That's the if. You only have a half a trading day tomorrow. So I'm not trying to read into this anything that I'm not certain of. And most of the time you're not certain anyways. But boy, I've been around this and I know what this last day and a half can be like. And tomorrow you have only a half a day. Be careful. You broke the pattern in the Russell. Higher high, lower low, losing the embedded reading. So we could enter a corrective mode. Very possible. I know people will talk about that Santa Claus rally, and it typically goes into the first week of January. I'm not arguing that. I'm aware of it. I'm not saying I'm bearish. You're not hearing that out of my mouth. In the VIX, the market gave a warning, and it gave it yesterday. It gave it on Friday, I should say Friday, when the market came out of this and went back to the 18-day average of closes. It had refused to embed, and that puts into play that if this doesn't hold the market, then you're looking for the possibility of the 100-day if it can get up there. That's just what it did today. If that's broken through, then it's the Bollinger Band. But I still think this market's got a problem in the bigger resistance between the 100-day average and the upper Bollinger Band with support back at the 18-day average of closes. In the T-bond market, we had a big break today right into that lower Bollinger Band. I think the pros are covering shorts, getting out, and they'll take a fresh look at the beginning of the year. Are we trending? No. You have a higher high, lower low, and an oversold market. In the 10-year notes, what the market did, and we can take a look at this, it had a pattern of higher lows, higher highs as of Friday. If it continues to rally, I look for that line in the sand. Let me define line in the sand. The closest moving average, the main one, which is the 18-day average of closes. So that to me is the resistance zone. You had an outside day down. Take out today's high on an outside day down. You could put into play wherever that Bollinger Band is as a short covering objective. Can the market break from here? Of course it can. Support, lower Bollinger Band. As we come to TLT, the market is finding and is proving it's finding support at the lower Bollinger Band, oversold condition, no trend. You've got a pattern of higher lows and with today a lower low. So let me say it the right way. Higher highs and a lower low. Got it? You see that. And that's why I left those arrows there. I wanted you to see how they're playing out. Dollar index. The first challenge of a Bollinger Band, upside or downside, you're going to hear me like a broken record year after year. I think that's where support comes into the market and the pros are aggressive in coming out. That's what I think has happened today. So I would not be surprised if you run out of downside momentum right here. That's not to say the dollar might embark on lower prices as we get into 2020, but this is not a pattern of a trend. This is a higher high with lower lows. I don't know what to do with that. Eurocurrency, lower low, higher high. First challenge of the Bollinger Band occurred right here on Friday. You followed through a little bit today with 12 points more, and now you're starting to pull back a little bit as it stays under that band. Overbought condition into what I call a pro area of taking money off the table. The British pound, totally neutral. Here's a market with a higher high, lower low. It's stuck at the 18-day average, but I think we give Boris Johnson a lot of credit. Out in left field with all the pundits that he had, he has accomplished to get a Brexit call. Now the question is, how good is he going to be at getting a deal with the European Union, who likes to move like this? Slow. We shouldn't rock the boat. You know how that is. It's going to be what he has to deal with. Japanese yen. It lost its embedded reading on the close today. It's already hit its upside target. So now the market's out of a trend. It's trying to figure out what to do with itself. I would not be surprised that it just hangs at that 18-day average for a bit. A lot of, I was watching Bloomberg. They kept talking about a seasonal that kicks in at the end of the year and the yen. Well, I think it's their news that drove it higher today because I didn't see anything else to do it, but I do understand seasonals. In Bitcoin, you're flat. You're stuck right against this 18-day average and have been for a week now. I'd be watching this. It's actually, this is the Indices. I didn't even put on the March. My fault. I looked at it and I said, I know that you shouldn't be in this one. You can be at the next month. This is how you finished up on Friday. That is not today's price. In Brent, I've moved to the March versus the March. And as you can see, the differential's about $5, hanging where the IEA had said earlier, and I'm going to keep up with that this year for you, what they thought the differential would be. They thought it would be $3 to $5 as the market got down here, and they're pretty much on the money. Now the question is there any further demand? Is the market getting either increased demand, or is the supply reductions that have been going on enough to keep the price differential where it is and prices high? And I do say high. I think that $67, $67.50 crude is a high price right now relative to other things. We're going to get trade deals. The USMCA deal looks like it's going to get done. The Chinese Vice Premier Liu is due in the United States this week, is what I read, to sign the trade deal. I don't know what the trade deal encompasses yet. I've heard the size like you have, $40 to $50 billion, and I've read reports galore and I've written about them, but I'd like to see what the final deal says. Same thing in WTI crude. Are you high enough to get production going? We've seen rig count starting to pick up. We'll see if that continues on. I'd be watching if you lose these embedded readings. If you lose them, look for a correction at least back to the 18-day average. I'm not bearish. That's not what I'm saying. The market has had a big run is what I'm saying. You're starting to lose the embedded reading here. That was the Christmas rally. Before I left, I said I expect gasoline prices here on the futures to go up. Now, I was also telling people when I was in Nashville, we paid $1.99.9. You know, they always cheat you with that. Let's call it $2 a gallon for regular. That was the cheapest price I saw on the road between Chicago and Nashville. The prices seem to go typically between $2.19 to $2.39 as you left the Cook County, Chicago area where all the taxes are crazy. In natural gas, lower highs, lower lows. The problem with this market is there's so much gas around. Now, we are due for winter. It is going to come. Do not believe people that tell you that this climate change means we're not going to get cold. I'm betting a bet here that January, February, we're going to get some cold weather. Already today in Chicago, we're supposed to get snow by tomorrow morning, and we're about 26 degrees. We were 60s last week. So we had that flare, but as old man weather comes around, there'll be demand that comes in, and you pay attention to that in these markets. Now, we write about all of this in our market research, and if you've not seen our Linn market research, why not avail yourself of it? Take a look at what our clientele get. You can get a free trial to it by calling us. You can go to our website to sign up for it. Try it. See what it's about. It comes out by email, and it also pops out if you have any of our mobile platforms or our charting platforms. It'll pop right in there. What I like is I'm able to use push notifications, and I let people know when they're there for them, a special report or whatever I'm doing. And I intend in January starting a lot more of my special reports and a whole array of commodities. Remember, when I do the special reports, they're video reports. They're only up 5 days at a time. I'm Ira Epstein. I want to wish you all a Happy New Year. I will be here tomorrow. I will be putting out my videos. You have a good one. I look forward to seeing you tomorrow.